Stop trying to figure out the Fed's meeting and what they said. You're decoding it and looking at the stars. Instead, I do that for you. I bring you that information each and every time they meet. And in this video, we're going to break that down. I sit through all the boring meetings so that you don't have to. How does that sound? I'm going to show you everything in this video, including what they said and what they didn't say that made the markets go haywire, and I'll explain all of that. And what about the fact that yet another bank has failed and nobody's talking about it? In fact, it made the markets go up. I'll show you all of that and more. You came here for the truth, so let me unveil that for you. First things first, the Fed hikes interest rates to a 22-year high after a brief pause, just like we saw with Australia and Canada, other countries that paused initially and then they continue to increase interest rates. The general trend has been 25 basis points, and for the most part, central banks around the world have said, we're getting towards the end. They all have basically said this. If you want to read the statement for yourself, as well as any of these other points, everything is in the sources, in the description, and all you need to know from this is that they increased by 0.25%, as everybody expected. Here we have it. Fed Chair Jerome Powell said during the press conference, I'm saying that we would be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year. I don't think it will be. On the topic of rate cuts next year, Powell said it's going to be a judgment they make based on how confident they are. General Fed speak, general information that he wants to give the bare minimum out so that the reporters won't have any ammunition on him. But something broke, something I'll explain in a second here. So I'm going through this. I admit I gave it 30 minutes because then I had to hop on a call right at that 3 o'clock mark. And, during this period, you're going to see this it's the same thing all the time. At 2 p.m., the statement gets put out, the market reacts. So I'm watching this, by the way, the chart back here is a 1-minute chart. So I'm watching this, and as all of this is going on, I'm watching the reactions in the market, as well at the same time I'm have CNBC and all these other things so I can see how the news is reacting to it. At 2:30 p.m., out comes the reporters. They're at the conference. First, Powell does a little prepared speech, which is exactly the same as a statement. And then the reporters ask the question. The reporters, get this, okay? These reporters ask the same question every single time for the entire 30-minute duration. It was the exact same thing. And what do they ask? Essentially, they were trying to figure out, are we going to get one more rate hike? Is it 2 more rate hikes? Or is this, a skip one meeting and then do another one? What's going to happen in September? They just kept asking the same thing. Are we going to get more? And Powell literally kept saying, every time he kept saying, I'm going to have to reference the same thing I said already. And he just kept repeating himself over. It was a waste. My goodness. If you didn't watch it, you're lucky. You saved 30 minutes of your life. Okay, but what's more important here is what all of this means. What's going on? Let me show you that, because believe it or not, the actions of the Federal Reserve have such an impact, not just today or tomorrow, but for the foreseeable future on everybody's lives. And average individuals are starting to say, what's going on? Why are they doing this? I'll show you those later on in this video here. You can see the market's loving it. The number of consecutive up days for the Dow. This is something we haven't had for a very long time. In fact, since 1987. Markets love it. They love this, and they know, they're just salivating at the thought that the Federal Reserve will eventually, at some point, start cutting interest rates. Here we have it. This is talking about, Jerome Powell and some interesting things that happen. Some theories. Plenty of criticism has been pointed at Powell for failing to clearly communicate at times the Fed's determination to snuff out inflation, but no one really knows why traders kept bidding up assets as he spoke. Wait a minute. So he's talking, he's not being certain, and he's at the same time kind of suggesting that they have to keep doing what they're doing, well, the market still went up. Theories abound. Many of them are interrelated. One of them is that Powell is more dovish than the broader 12-member committee that sets rates. Powell's actually ranking as a centrist, all right? Or that he was framing his answers to appease the doves in the committee and keep them on his side. Another states that Powell, prompted by certain sorts of questions from the reporters, kept using words like disinflation and financial conditions. By the way, financial conditions have come down. I'll show you the chart in just a second. That triggered buy orders from the algos. Do you see? This is what we're talking about when we start to link the general information that you're going to see out there and how this affects the markets directly. You see, if he's using a word like disinflation, and by the way, the words that he chooses are absolutely scripted and are done with intention. It isn't something that he hasn't, he's been looking into this and getting this all dialed in. And he even references the paper so that he can read right off of it. So the point is, we're looking at the words he uses directly affecting the computer algorithms, which are overwhelmingly the majority of all trades that take place. And here we have it. Markets, they're buying it all up because the algorithms do it and the people follow. And that's what we have right here and now. Look at the financial conditions index. This has been essentially becoming easier since, I'd say the fourth quarter of last year, when things were much tighter. I mean, you could see the comparison. That's the green line. And financial conditions, I've broken it down before. It's a bunch of different factors. It's not just interest rates. It factors in kind of everything together. And those have been slowly but surely coming down and becoming easier than they were prior. And it's still elevated, certainly it is, but it has been getting easier. And that's what the markets want to believe, that they'll just continue in this direction. And Jerome Powell keeps highlighting that in all of the meetings for good reason. You could see, though, as these interest rate rises continue, kind of a big problem, though, for the government, because you could see it for yourself. Federal interest expense. Yeah, you got a problem when you're spending literally trillions of dollars on just interest. That is going to hurt big time. You know that as a fact. And here we have it today, seeing it right in front of our very eyes. When the interest rates are so high, you got all this debt that's piled up, especially just over the last couple of years. And what's going to happen? Well, they got to pay the debt back before they help you, before they send you out a stimulus check, before they give you some sort of incentive, before they go and fix your infrastructure, they pay that debt. Can you believe that? This is an absolute fact. There's no moratorium on that. They're not going to stop that. The debt gets paid back first. Just like you would think is the exact opposite of what would happen. If we have any left over, we're going to pay the debt. No, the debt gets paid first. Okay. What about this? Regional banks ETF pops nearly 5%. Heads for the best day since June. Wait a second. Regional banks. I guess maybe everything is fine now. But I mean, interest rate, they rose though. So how does that make any sense though? Because with SVB and these other banks, they did really bad because interest rates were going higher, right? Interest rates went higher. Their trades are just getting continuously exposed. All that which was swept under the rug is starting to come to the surface. And yet, regional banks went up by 5%. Well, what happened? How about this? PacWest Bank, thrashed by deposit crisis, will be taken over. Bank of California is set to absorb PacWest, a larger lender that has seen its depositors flee this year. There have been several banks that have gone under this year, and it doesn't seem to affect the markets, does it? Markets don't care anymore. It is wild. It's absurd. This is not normal and it's not healthy. Wouldn't you rather see a problem get exposed? We deal with that problem. It's a little bit of a setback. Let's just take care of it and then we move on and up from there. Or would you rather see craziness and insanity and big, massive booms and busts? People will say, well, I can take advantage of the liquidity. But the vast majority of people just buy and hold for very long periods of time. And they don't really know what they're doing in most cases. So if that's the case, well, that's not very good, is it? So that's what we're experiencing right now. It's crazy. This isn't a good thing. It's not a healthy market. The economy itself is struggling. The Fed is trying whatever tools they have, but I don't know if it's necessary because inflation has slowed down. This is a New Yorker who works as a buyer for a liquor store. Inflation did slow down, so I don't know what the point of it is. I see more of an issue with homes and buying a house. With regards to the rates, it's just simply not affordable. You see, what's happening here? People have been told that the Federal Reserve increasing interest rates, that's the enemy. That's the problem. They need to reverse course, bring interest rates all the way down, and have no fear because inflation is going away. What people don't realize is, of course, that if they were to do that, then inflation would be entirely out of control. You think for a second, really, that if you are going to drop interest rates, you're worried about housing right now? What do you think it's going to look like if they cut interest rates here? The housing prices will go absolutely berserk. It will be like 2020, perhaps even more so. And we don't want to see that again. We want a steady rise because we don't want to have a crack that then, like a sinkhole, everything falls under it. Have you seen a sinkhole before? The thing collapses and takes everything with it. That's what has happened. I have read basically all the history that I can, the financial history, book after book after book after book, reading about different countries and how they had their own crises and what happened, what caused it, who was involved, and what happened afterward. And it's the same things over and over again. They get too anxious, too much goes in, and it's at the point when it seemed oh so impossible that it fails. We don't want that. We want to see toughness. We want to see, some actual robustness, but it doesn't happen. Coca-Cola said this, referring to the customers. They're looking for value and stocking up on items on sale. We have seen some willingness to switch to private label brands in certain categories across the sector. Consumers are increasingly cost conscious. And this is the point that I wanted to make about this, that even Coca-Cola has said, we are now stopping to increase our prices. We're going to stop increasing because the consumer can't handle it. So price inflation is there, but Coca-Cola is basically saying, okay, we can't do any more because the consumer on a regular basic item, I can't remember when the last time I had a Coca-Cola was, but at least 15 years, but I don't know what they cost, but I'm assuming that it's something that, just $1 or $2 or what have you. So this is not a big expense for people. But if people start to go, okay, I'm not going to go to the Coca-Cola type brands. It's not just Coca-Cola, but they own so many different companies. I'm going to choose this brand instead. If it's basically the same thing, that's an issue. People can do that. Consumers can make that change. Powell, housing market has a ways to go before prices cool. Absolutely. Keep those rates up high and you will eventually cool the prices down, but not yet. Got to keep them there for quite a while longer. And are they going to be able to do so without all these banks failing one by one by one? The dominoes fall. We'll see what happens. This is an interesting one. So the staff now has a noticeable slowdown in growth starting later this year in the forecast, but given the resilience of the economy recently, they are no longer forecasting a recession. That is Jerome Powell talking about the Fed, and they don't see a recession. It's not happening. It's not going to occur. You don't have to worry. I don't know. We can change the definition. We could look at it even on their stats. They're saying everything's going to be a-okay. But historically, what we have seen, basically 100% of the time, they increase rates step by step by step by step. They see that there's kind of a problem. Those rates start to go in line for a little while, 6 months, could be more. And then something breaks, and then they basically cut interest rates rapidly. What is that something? Is it going to be bank after bank failing? Is it going to be, it could be anything, really. It could be something with the auto loans. It could be something else entirely. But at this time, all we know is what they're doing, the actions they're taking, how this is affecting you. And we see that. That was demonstrated right here in this video. I came full circle. If you want to be able to contact me directly, if you want to get the video of the day notified, video of the day, if you want to be able to see all kinds of information that will help you out, you got to join what is coming close to 1,000 people on the Discord. You got to get on this Discord. If you've never heard of that before, just click that link down in the description, get on Discord. It's totally free, and you'll be able to get all this really cool free stuff. And I'm bringing more exclusives, including free stuff is coming. I'm waiting for the 1,000 people to get in there. We're at almost 700, 800 people in there. I want to see you. Hit that link down in the description. See you there. Take care.